Good morning, friends. Welcome to my channel. Now, today we are going to discuss about the two main economic and finance news for today. So, first we'll go and check. Now, the first news is the S&P Global Rating retains India's GDP forecast as 6% for FY 2024. The S&P, that is Standard and Poor, the global rating agency. It has on Monday retained India's Global India's growth forecast for FY 24 at 6% on the back of good growth in April and June quarter. So it is good news. But a slight concerning thing is that this is lower than all the recent revised forecasts and RBI's own estimate of 6.5%. Now, we'll see RBI had estimated that had estimated that will be going at 6.5%. Whereas as S&P is saying it is 6%, though it was not their estimate. They were estimating 6% earlier also, but RBI was more optimistic and they are still estimating at 6.5%. One slightly concerning thing is that inflation. RBI is concerned about the inflation and they want to keep it below 6%. But now they are S&P Standard and Poor, they are forecasting that the inflation forecast of India will be 50 basis point more than the previous one. So that is one concern. Then S&P Global Rating has also estimated that India will grow at 6.9% and 6.9%, 6.9% and 7% in next 3 years, that is FY 25, 26 and 27 respectively. So we can see a mixed news there, though they have retained the forecast, but now the inflation is a concern for all of us as RBI, and that may prevent RBI from reducing the policy rate cuts. Now, second thing, the RBI governor calls for reduced dominance of individual directors on bank boards. Now, our RBI Governor Mr. Shaktikanta Das has emphasized the need to avoid the excessive dominance of one or two directors in the functioning of bank boards. As you know that the board for any company has to work collectively and they should work as a team. But what we have seen, especially for the banks, RBI is commenting here that they there is a dominance of one or two directors, and other directors they are not opposing, they are simply following them, or they are not raising their voices. So that is a very serious thing about corporate governance in any company, especially for the banks. So now we'll see what he has said. He has said that directors to directors to engage in open. That's what he is talking about, the corporate governance. Directors to engage in open and frank discussion and be proactive in questioning banks' operation. So they should work as stakeholders. They should work as uh, checkers, not just followers. Especially, he said this is while addressing the directors of urban cooperative banks. Mr. Das noted that the RBI had observed such undue influence even in major commercial banks. So he was not talking about just talking about the RRBs or the UCBs, that is urban cooperative banks. He said they have observed the same issue even in main commercial banks. When identified, the RBI has advised these banks against such practices. The government first addressed UCB directors on August 30, 2023, and the video of his remarks was released on Monday. So it was not a recent meeting, it was held in 30th August 2023, but it was released, so it has not come to public domain. Now, National Pension System. Government subscribers can now opt for NPS Tier 2 default scheme. So, just a quick recap for you. What is NPS Tier 2 and Tier 1? NPS Tier 1 is a scheme of pension for all subscribers of NPS. It is a default one. NPS Tier 2 is the optional scheme and which can be opted by anybody. So now what the PFRDA, that is Pension Fund Regulatory and Development Authority, has introduced the NPS Tier 2 default scheme exclusively for government sector subscribers. With this, the government sector subscribers under NPS will be given an additional investment option of the default scheme along with the existing scheme, E scheme, C scheme, and G is investment option. What is E scheme? That is equity scheme. C scheme is corporate governance, and C scheme is combined, and G scheme is in government securities. Now, NPS Tier 2 default option is designed to offer flexibility and convenience, aligning with the unique requirements of the subscribers and the government sector. In the circular dated 22nd September 2023. PFRDA said the government sector subscribers may continue with the default scheme under Tier 2 even after shifting their accounts to other sectors. So, this is a very significant development. Another news pertaining to finance and capital market. RBI imposes monetary penalty on SBI. So, three banks have been imposed with monetary penalties. They are SBI, Indian Bank, and Punjab and Sindh Bank. Why RBI has done this? RBI on September 25th said it has imposed monetary penalty on three banks, that is State Bank of India, Indian Bank, and Punjab and Sindh Bank, and Fed Bank Financial Services for rule violation. What they have done? The central bank had imposed 1.3 crore on State Bank of India, 1.62 crore penalty on Indian Bank, and rupees 1 crore on Punjab and Sindh Bank, and 8.80 lakh on Fed Bank Financial Services. So this is a very substantial amount of monetary penalty. We now will see what is the reason. The monetary penalty was imposed on State Bank of India and Indian Bank as it sanctioned a term loan to a corporation in lieu of or to substitute budgetary resource envisaged for certain projects without undertaking the due diligence on the viability and bank ability of the projects to ensure that the revenue streams from the project were sufficient to take care of the debt servicing obligations. So these are the main penalties for the non-compliance. Now, another important news: RBI mandates lender to disclose borrowers' secured asset information. Now, what it is saying, lenders may have to undertake a huge exercise over the next 6 months, as RBI has asked them to display on their website information on borrowers whose secure assets have been taken into possession by them under the SARFAESI Act 2002. While this information will be helpful for potential buyers who want to buy assets that are put up for sale auction by lenders, as details of security possessed and name of the title holder of the security possessed will be readily available for verification online, bankers may have to put their shoulders to the wheel. So now it is a new phrase, shoulders to the wheel, for uploading the information sought within the stipulated time. So it is a huge exercise and it is going to be a very tough one for the bankers, as now we know that main bulk of the financing is done under SARFAESI Act 2002, and whatever assets bank has in possession. Now earlier this information we were providing as and when to the different websites like for auctioning and others, but now here all the information has to be available on their website, and that too with the details like uh, security possessed and name of the title holder. So it will be very beneficial, but As you know, anything we start in the beginning, it is a bit troublesome. So now we all the bankers have to work harder for the next 6 months on this. Now another news: RBI cancels Kapol Cooperative Bank's license. Now what where this Kapol Cooperative Bank is now, the cooperative banks are under RBI scanner, and for the working and other issues, finance issues, many times they have even put many kind of restrictions like deposit and withdrawal restrictions. Now this is another bank, and consequently the bank ceases to carry on in banking operation with effect of close of business on 25th September 2023. So bad news for all the policy holders, all the depositors and the customers of the Mumbai-based Kapol Cooperative Bank. Now, we moving on to another story that Moody's upgrades Tata Steel to investment grade with Baa3 issuer rating. As you know, Moody's is a rating agency, and they are they are doing ratings for company, which in turn affects their borrowing capacities. Now, rating agency Moody's Investor Services on 25th September, they have upgraded Tata Steel's long-term issuer rating to Baa3 from Ba1, so that is a significant increase. The upgrade reflects our expectation of the continued strength in Tata Steel's credit profile due to company's solid market position in India. So that is a good news. Now another news: TCS expands partnership with Africa Standard Bank Group to centralize security settlements. So that is one news pertaining to TCS and pertaining to Africa. Now, Indian Oil unveils India's first green hydrogen run bus that emits just water. So it is going to be interesting, and with India's push on green hydrogen and other alternate fuels, rather than conventional fuels, this is going to be very interesting. Now, moving on to our other section, that is regulatory and development news. SEBI extend additional surveillance measures straight for trade settlements to SME segment. You know that there is one small SME exchange also, where only SME stocks trade. So now they are also taking they're doing now strict mechanism for this SME stocks also. Central considers CLC review for stricter unlisted company regulations. Now, the Ministry of Corporate Affairs, that MCA, is considering referring the need for stricter regulation for larger unlisted companies to Company Law Committee. Now, what is Company Law Committee? Which recently had its tenure extended by 1 year. The Company Law Committee tenure has been extended by 1 year. This move aims to gather diverse expert opinion for enhanced corporate governance in bigger unlisted companies, including mature startups. So we have seen many issues, and especially in the startup, which is now the failing rate is increasing, and with this, we can observe that at some point of time it is hampering companies' economy also. The entrepreneurs, uh, because of some entrepreneurs now, many of them are not getting the funding for their projects. So this monitoring and reforms are necessary. So what the CLC will do? The CLC may explore requirements like quarterly financial reporting for these companies, similar to listed entities, and potentially define the criteria for larger and listed companies. So these are the news for today. I hope you will like the video. In case of any suggestions, please let me know, and I will continue to bring fresh and latest news from the financial world. Thank you.